Let's take a look at bonds today and try to get an idea of where I think they're headed based on the indicators that I typically use to make trades. Now really I want to use these types of videos to show you how my indicators work and let you, be able to look at stocks on your own and try to determine where you're thinking they're going and what type of trade you might want to place. So it's not so much about me trying to predict where this is going to go as it is me trying to show you how the indicators work. If you need to know how to set up any of my indicators, I do have links in the description below that tell you how to set all of these up, and you can get your chart set up pretty much just like mine. So let's take a look at my first set of indicators, which are my Bollinger Bands, and see where bonds are today. And based on this, if we can get an idea of where we think they may go, and then compare all the indicators, see if they're all showing us the same signs. Now keep in mind bonds are somewhat news driven, so technical analysis sometimes get thrown out the window with a tweet or some sort of news announcement or a Fed announcement of some sort. When you're trading these or anything, you have to take in mind that these things can happen. First thing I want to take a look at is I drew in some weekly trend lines. That's what these dotted lines are right here and right here. These are all weekly trend lines. And you can see from a weekly basis, we've still got some support on a weekly uptrend. And this was another weekly uptrend which was broke here. And then it was retested and came back down. So one thing I want to note is bonds is trading right in this area. I'm going to zoom in on that. Bonds is trading right in this area right now, and it's halfway between this resistance and this support, which means based on that you could still see some move up before it comes back down. It's also trading right at this main line, which typically is where if I believe that the trend is down, this is typically where I would start looking for some sort of entry. So we've got an area where it's telling us that if we believe that there's a downtrend here that's beginning, and you could draw a daily trend line, right through here. I don't have daily trend lines on that chart, on this chart, and if this is a high, you could draw another downtrend line on a daily right here that would show you visually what may be going on here in bonds. But as I look at my Bollinger Bands, it's telling me, hey, this may be a good place to short. I probably would not go short today. I'd like to kind of wait and see what tomorrow looks like. We're going to, because you had the gaps up here into this line, and then you had this candle which was letting you know there was some indecision and a chance to move down. So tomorrow, if I saw a candle like this, I'd be more likely to go ahead and go short. If I had to bet based strictly on the Bollinger Bands, this looks like a good place to go short. So keep that in mind with your trading. If you've got some long positions on, they may be some problem. You may have a problem. If I did go short here, I'd probably put my stop right up here at this 1 ATR deviation. So let's take a look at my other indicator. Now this is my wave indicator, and what we see here is we have a 2 ATR band here, and then this is the wave that I'm using to determine my trend and potential buy areas, or sell areas in this case. And we're right up in the middle of it. So again, this is indicating to me that there's a potential short to be had here, just based on the technical analysis. I would probably go back to the Bollinger Band for my stop, but because here, if you're going to go short right here based on this indicator, your stop, is probably going to be right here at this 2 ATR band. A more conservative stop would be right here above the top of this band. But you can see this was penetrated here, and then it took off back down. So if you put your stop here, you've got a greater chance of getting stopped out, because I do believe that this is the trend we're on right now, moving down. I'm not sure that it is going. Let's back out a little bit. I'm not sure it's going to continue this trend just yet. Right here we've got good support for an uptrend. So if you did go short here, you probably need to be looking at a target in this area right here, because we have had bounces here. And if you look at a horizontal price line, there's a lot of support and resistance right here that you've got to take into account. Doesn't look like it's going to move much below this. RSI is right in the middle, so it doesn't really tell us anything. But just looking at the wave indicator, it does look like that we're in a short zone. I would like to see another candle. Now, granted, it could gap down here, in which case, it just depends how far it gaps down. I'd have to make a decision on whether or not I thought that was a good trade. But it certainly still has the potential to. And let's take a look at my third set of indicators. These are my EMA moving averages, and we're seeing the same thing. You know, we moved up, you know, toward this 30 EMA right here, which is a potential short zone. This line here, it's a little confusing with my trend lines, but this is the 200 simple, and this is the 50 simple. So we're between those. We would expect to get some, you know, resistance from the 50 and some support from the 200, and we're between these two trend lines, which it could bounce between. But, you know, right here, I'm still seeing, hey, this is a short setting up, that we're going to continue. You know, the 50's moving down. Yes, the 200 is still moving up, so we've got to take that into consideration. But the 50's moving down, the EMAs are moving down. You know, we're right between the 20 and the 30 right now. So, you know, if I had to make a decision, you know, I would say that there's more of a chance that the bonds are going to continue to move down, barring any outside influence. The question is, at some point, yeah, I do believe they're going up. So at some point, this trend line is going to start to really push them back up. If they were to break above, here would be a stop, or here would be a stop. If you want to take more risk, this would be your stop. But I think if it does move up into this area, there's a lot more potential that this is a reversal, and it's going to continue this longer term uptrend that we had back, you know, if we look back, that we had back in this area. So, you know, short term, you know, I think that there's a huge argument to be made that bonds are going to move back down from this area. Long term, I still believe that there's an uptrend, you know, coming back through here, and looking at the 200 moving average, simple moving average. You know, I still think this is a valid overall uptrend. I would not go long right here though, because there's just too many indicators that are showing me that this is going to move back down. Yes, there is a little hook starting right here that could show a potential reversal as we had here. But even here, as it reversed up, you notice it did eventually fail. And we're kind of respecting if we were drawing daily trend lines, you know, we're kind of respecting these trend lines right through here right now. So if I were trading bonds today and I had to make a decision, I would probably go ahead and short them. What I would prefer to do is wait till tomorrow and see what kind of candle we get tomorrow. You know, if we get something, again, you know, like this, then that's a definite sign that we may be ready to go short again. If it does come up a little further, that's fine. You know, this is still a valid short, but if I could get short from here instead of here, that's a much better trade. The one thing I would not do is go long. This was your long opportunity down here if you wanted to go long, and we'll look back at the Bollinger Bands just to kind of get an idea. You know, if you wanted to go long for a counter trend, let me back out, that didn't work out right. If you wanted to go long for a counter trend trade, you know, this right here would have been your long area, but between this 2 and 3 ATR, you know, that way you could trade back up to the mean. So I would not go long here, simply because this trend may continue down a little bit further. If it gets back down into this area, we'll have to reevaluate it, but there's certainly a potential, you know, long that could be had in this area as we move forward, and that's something I'll be watching for. You know, I would not make the trade today. I would wait and see what tomorrow looks like. I'm wanting to see a candle like this or a candle like this, something to show me that this is not going to gap up again, because there is still that potential. And you got this move up, and you got a gap up, and then you got where you were seeing weakness finally. And the same here, you know, this trend had started down, it moved up, you know, this was right here, it could have been a signal to go short in this area, although I would have either taken it right here or I would have taken it below it, with the stop being right in this area, which would have been a small loss. Here you got again the jump up to the, this was a 2 ATR jump up, this right here to me would have been a sign to go, and then it was moving back down again with this trend. You could have taken it short here or just in this area with a stop up here. So if you did go short here today, you know, You could put your stop right here. In all honesty, I think you're going to have it up here, just in case there is a whiplash. But there's no reason you have to make the trade today. So why not wait until tomorrow and see what it looks like? Certainly, if you get a huge gap down into this area, then you can't make that trade. But if it's just a slight move down or even a consolidation, then that could be a good trade to make going down. If you have any questions or comments, let me know. I always love your questions and comments. Please like this video and subscribe to the channel. Thanks.